Bitcoin just kind of like simmering around, that 19,500, 20,000 kind of level. Now, the good thing is when NASDAQ or S&P comes off 2-3%, it's not doing the same necessarily, but it's not getting those bumps when it comes up. It's kind of doing like a blare, not much of anything. A blare.
No,
it's a technical term.
It's kind of what we wanted. Like, we don't want too much correlation between Bitcoin and crypto and NASDAQ, and we saw so much of that already this year. I think it's a good thing it's not correlated. And look, we say nothing's really happening. It's kind of boring, but there's so much building going on. There's so many things that are happening underneath the surface. I mean, we'll talk about them here, but things happening with traditional finance going into crypto and vice versa. And then so many, I love the DeFi and I love the NFTs and all that. So much building is going on, so many interesting things that once it comes back, once the world economy comes back and people get on this, and it's going to be crazy what happens.
Well, and that was, the title of today's show is crypto frozen or is there steam bubbling below, right? And that's exactly to your point, right? We're seeing this kind of frozen movement and momentum in Bitcoin, ETH, and all the other crypto assets, or most of them. But there is an awful lot going on under the surface, especially on an institutional side, which makes me very, very happy. We like institutional adoption.
It's great. And real quick, Maddie, let me tell you something, because I'm not real big on trading and charts and all that, but I did go look at my chart because it seems like Bitcoin has been at this level for a really long time. And we could probably chart it. The number of Crypto Dome shows that we've talked about Bitcoin somewhere between, 19 and 24 or something. If we look back, I went back and looked at 2018, which is when I remember a huge drop in the Bitcoin price over like 2 days, and then it just hung out in like the $3,000 to $4,000 range for something like 6 months, and then it just broke out and it's never gone back down. So I feel like this is kind of like that. It broke down because of some sort of macro factors, and then all of a sudden it's all this building happened, and then it just blew up again, because that's when DeFi came into existence and everyone got excited again. So I feel like we're kind of at that time where we go, okay, we're at kind of this floor. We're just going to hang out here until something happens and everybody gets excited again.
I'm very inclined to agree with you, and I'm also hopeful to agree with you. But when we're seeing names like Mastercard, so Mastercard came out, they're bringing crypto to the banks. I believe they're using Paxos as a bridge as an intermediary between one side and the other. I'll let you talk about that as well, but it was more about the fact that there's some big names, while we're seeing this stability in Bitcoin and other crypto assets, that are now coming in saying, right, this is probably the time we can get to work and start putting a lot of this infrastructure in place, and adoption is coming. So this Mastercard story, what do you think?
I think it's great. So they're actually using Paxos as the custodian and as the exchange behind it, and Mastercard is actually the go-between between the banks or the traditional institutions. And
sorry, I got that wrong way around.
Because Mastercard's really good at saying, here's going to the banks and going, we're going to help you figure out who the people are and be kind of this go-between. Will be the kind of the technology in between, so that you as the bank can offer crypto adoption, crypto trading, on-off ramps, all of that, using Paxos as your back end. And Paxos is trusted. PayPal uses Paxos, several others use Paxos. We don't talk about them as much, you and I, because they don't tend to be out there marketing and stuff. But what they do is they're just really good behind the scenes with stable coins, or really good behind the scenes with custody and exchange. They're just rock solid. And then Mastercard is kind of that in between, going, all right, banks, your people, your retail users want to trade crypto. You probably haven't done it yet because you don't know who to partner with. You have to do all the KYC, AML. You don't want to do all the support and everything. Mastercard is taking over, and of course, Mastercard's good at that, and saying, we'll let you offer that to your retail clients who really want it, and we'll take some of the heavy lifting. Paxos will take most of the heavy lifting, but everyone knows the name Mastercard, and that'll just make people feel better about it.
Well, and it's kind of an awesome situation because Mastercard, as you say, that's what they do, right? They've done that whole compliance on the underlying user KYC side. That's how they cut their teeth. That's what their MO is. And so what a perfect little plug-in to have this crypto side offering now.
Right. I think it's great. And banks trust Mastercard, obviously, already, right? So they're not having to necessarily put all their trust in Paxos, this company Paxos that came, that is a crypto company. The banks probably have had the opportunity to work with them and work with Coinbase and work with others and said, we don't feel so sure. And as soon as Mastercard enters the fray, they say, we're happy with it. And of course, on the retail side, everyone knows Mastercard and feels comfortable with it.
Okay, so that's one little positive kind of universal bubble within this where Mastercard's kind of that intermediary. We've also seen, it's obviously earnings season, Q3 earnings season. We're in the thick of it right now. Bank of New York Mellon's earnings call was on Monday. The CEO, Robert Vince, actually highlighted, again, the level of institutional interest in crypto. I think the stat he said was that 90% of them are interested in investing in some type of tokenized asset within the next few years. That's a pretty big statistic for an institution to throw out there.
Oh, yeah. And that's big for an institution like BNY Mellon, who is talking to other institutions and they know what they're talking about, because we've seen all sorts of studies and surveys and everything come out that says, 20% or 30% or 40% is interested. And of course, we've seen some top people say, I'm not interested in this, or I don't understand it. And we'll talk about some of those. But for the head of BNY Mellon to say, of those that we've talked to, we feel like about 90% are interested in getting involved in some sort of tokenized assets or tokenized securities or something. That tells us that there's interest in crypto. It tells us that there's interest in the underlying system, things like instant settlement or immediate settlement. This is something that institutions, that banks, that hedge funds, that pension funds, this is something they want. They go, we want the benefits of that blockchain technology gives us, and we know that crypto is a part of it. But these are the things we want. We want tokenized assets because we feel like it's more efficient, more transparent, and more immediate. Why would they not want something like that? It doesn't mean that the head of BNY Mellon says 90% of their customers are interested in buying Bitcoin. It means that 90% of them are interested in utilizing the system that Bitcoin is built on top of.
It's a lot of blockchain technology that's going to be utilized in a lot of things. And that was even backed up by, an old school guy, John Mack, the ex-CEO of Morgan Stanley. He was on CNBC. He was saying that he believes that monetary transactions and asset trading will take place digitally on the blockchain. There's another supporter of this technology. It's fantastic.
Right. He gets the technology, and obviously he's been in the traditional world for a while. I always say when we're talking to financial advisors, they get excited about things like DeFi because we know where the inefficiencies are. He knows where the inefficiencies are. He knows why this technology will progress forward, and he knows why more people will use it. Now, in reading his comments, he also said he thinks it'll be sometime in the next 50 years, which is kind of a long time period. I'm kind of hoping it happens faster than that. My family hopes it happens faster than that. I'm sure yours does as well. But the interesting part also is John Mackey said, I don't fully understand where the value comes from, but it seems like we're going to move this direction. So it wasn't a full-blown endorsement of it. It was kind of like saying, okay, this is the way technology is going. This is the way finance is going. I'm quite certain most traditional finance is going to move that direction. And so it wasn't, again, a full-blown endorsement. It was a kind of old school guy, again, kind of like our friend Jamie Dimon, who said, I don't understand where the value is. I don't see it. And John Mackey said that, but he said, I feel like most, so many financial transactions will be settled on chain, which just goes to the growth of the ecosystem. And that trickles into things like token values and token prices and crypto prices and such. But we need that adoption. We need those use cases. And as we've talked already, the institutions coming in and utilizing it for things like tokenized securities and settlement, that's where we're going to see a lot of the adoption, which eventually drives the price.
Well, Adam, thanks for totally crushing my soundbite. I left the 50-year part out on purpose, but now, we've got to address it.
Yeah.
But, okay, so to address that, the comeback on that is the fact that Bank of America had a poll with some high net worth individuals, part of their clientele, and a decent number were involved in this poll with high net worth, younger to older. Well, it's across multiple demographics, but the poll found that young investors are losing faith in traditional investments, and they are looking towards crypto. So while John Mack might be saying that in the next 50 years we'll see more adoption of asset trading taking place digitally on blockchain, I feel like the younger generation is going to push it sooner.
Yeah, the younger generation, of course, they're already pushing it quite a bit. They are obviously more digitally native than the older generation already, and they're more likely to be more crypto native earlier on. They're more likely to adopt mobile apps that help them with crypto and help them manage all their accounts. And it's the same generation that uses apps like Mint and Acorn and is able to consolidate all their accounts and move things easily with their phone, and is already sending payments via Zelle and Venmo and Cash App and such. So they're going to be more native to this, to actually using the system, and therefore they understand the value of crypto better than someone like John Mack does, because they see where the network is being used. They see why it's important to them, and therefore they're going to see the value more. And they've kind of lost, I don't want to say lost faith, but they've lost that enchantment with stocks. I think a big part of it is, they've seen where, algorithms and everything have taken a lot of the alpha out, right? I mean, most people just invest in ETFs or portfolios of ETFs managed by an algorithm, right? And they've taken away the ability to, quote, beat the market. So how else are you going to grow your wealth? You're going to have to find something that is new, that has, incredible amounts of upside, if you are willing to take a little bit of risk. As I heard someone, a friend of mine, say on a podcast yesterday, it's for those that have the courage to get online, download an app, and hit send. The people that have the courage to do that are going to be the ones that have the ability to take advantage of what crypto is going to give us, much like, ironically, probably the people who have made it in the traditional finance system at this point are the same ones who took that chance on the internet. They're the same ones who took that chance on internet stocks probably 20 something years ago, are the ones that are now kind of the old guard of traditional finance. And now we have kind of the new version of the internet, which is crypto, and that's what young people are going to want to take advantage of.
And to be honest, a 50-year time frame just seems insane to me as well. The fact that we've seen the amount of progress we've seen over the last 10, 15, 20 years has been incredible. There's no way things are going to slow down over the next 50. So, sorry, John Mack, I kind of disagree with the time frame. I like your adoption mentality, but bring it sooner.
Well, it's nice for him because he probably won't be, I mean, no offense, he probably won't be around in 50 years. So he's not going to know whether his prognostication was right or not. So it makes, he hedged a little bit, I guess. He sandbagged it.
Sandbagged it, yeah. And prognostication, what a word. I'm going to put that on my calendar today. Let's talk about our friend FTX, Sam Bankman-Fried. He's kind of been seen as this crypto savior over the last several months. And, anyone in the crypto world seems to have, much love for this, the group, but Sam himself. Texas regulators, they seem to be starting to pick on him there. He's being accused of offering unregistered securities and engaging in fraud. You're sitting there in Texas for now. What are you hearing about this? What do you think?
Just being in Texas, I haven't heard that much. It's not something we talk about while we're walking down the street.
You don't walk down the street, have a little chit chat by the oil well and see what's happening.
Yeah, we ride our horse over to the oil well and we chit chat over there. But no, here's what they're coming after. And what's really interesting about this is Texas regulators have basically said they're offering unlicensed securities, but they're not talking about crypto assets. They're not talking about Bitcoin and ETH and any of those others. They're talking about the yield generating ability, right? So I put my USDC or I put my DAI or I put my ETH in at FTX and they pay me some sort of interest. So the Texas regulators have said that constitutes a security. They haven't weighed in on it, and they basically said, we're not talking about crypto. We're not talking about Bitcoin or ETH or anything else. We're saying that the fact that and keep in mind, the regulator that brought this on actually connected to FTX and, signed up, did the KYC and everything, said, I live in Texas, and then was able to earn yield on his crypto. And he says that's what constitutes a security. And the fact that FTX didn't come register that with us means that they are selling an unlicensed security. And that's kind of the issue. And, I can't say they're wrong. I mean, one, I don't know the regulation that well, but it's kind of like what Coinbase, remember, was trying to do last year. And the SEC put a stop to them just before they released their Coinbase Earn platform or Coinbase Earn product. And the SEC said, if you let that go, if you let people do that, we're going to sue you right away. We're just telling you that right off the bat. And there was a big, back and forth between Coinbase and the SEC. And Texas is saying, look, we don't have a problem with crypto right now. We have a problem with this product in particular in FTX. So we'll see where it goes. FTX has played really nicely with regulators for the most part. It might be something that was an oversight. It might be something where they go back and pay some sort of fine, and better to what is it? Better to ask for permission than forgiveness, something like that, or forgiveness than permission.
The other way around, actually.
Yeah. I've been married too long. Better to ask for forgiveness than permission. So I think that may be it. It might have been an oversight again. You got a whole bunch of countries that FTX is in, plus 50 states here. There might have been some paperwork missed.
Well, we'll do it. Well,
Yeah.
I don't, but just if anyone's watching. Speaking of the SEC, it seems like the SEC chair Gensler is under more pressure to release some crypto regulation, and this is now coming from, politicians, senators, Democratic senators. They're all kind of saying, "Come on, get something done." Do you think this pressure to release crypto regulation, and we've had this conversation a million times now, do you think this is going to help push a BTC spot ETF?
I don't know if it'll push a Bitcoin spot ETF. I think there are some other issues there. I think I'm hoping that having Congress people push the SEC and push the chair to say, just give some guidance. We've used that word over and over and over again. Guidance. Give us some regulatory guidance so we know which direction to go. Right now, it seems very haphazard and doing it in a way that we says we're going to sue this group, we're going to sue that group, and there doesn't seem to be a whole lot of rhyme or reason to it. So what they're saying is just give us some guidance. Whether or not that results in a spot ETF, hopefully it does, because hopefully the guidance says here's where we, the SEC, would feel comfortable. And therefore, if you do 1, 2, and 3, that probably leads to a spot ETF. But I think that the key here is a lot of these senators and a lot of the Congress people are, maybe they're tired of hearing from their constituents that say, can you just put something in place? And the problem is the SEC and especially Chairman Gensler don't seem to be able to do that. They don't seem to be able to just say, we're going to halt a lot of the actions we have now and just give some guidance and then see where everyone falls, on which side of the fence everyone falls, and maybe give people the opportunity to come into compliance over some period of time. That's all we want.
Well, let's hope something comes out sooner rather than later. So, Adam, before we wrap, this is something you've brought up before in regards to NFTs. It sounds like a house was sold on OpenSea as an NFT.
That is accurate. That is what happened. A house was sold over OpenSea, so it wasn't like it was done in some back room with some super engaged protocol or something like that. It was on OpenSea. Someone bought a house on NFT. Now, as an NFT, it wasn't like the house just went up as an NFT and it was a collection, 10,000 houses that have slightly different characteristics or something like we think of with Bored Apes. There was actually a process behind it, and there's one company called Roofstock that actually specializes in single family homes that are bought as investment properties, but they created an LLC for the home and then tokenized the LLC, and then we're able to sell that on OpenSea, as an NFT. And someone bought it. Someone actually got a loan for it and bought it. Now, this isn't something where someone can break into my wallet. So if I own the home NFT, it's not like if someone hacks into my wallet, they get that home. There are safeguards in place, because I've seen a lot of things on Twitter about someone's going to get their wallet hacked and all of a sudden they're going to be kicked out of their home. That's not how it works. There are a lot of safeguards in place. But the key here, some of the keys are they can get a loan for it. They are, taking the measures to make sure that the NFT actually represents the ownership of the home, that I can actually represent it. I can show you the wallet if I'm the one who owns it and say, look, I own this by virtue of the fact that I have this token. It's denoted on a blockchain. It's denoted who owns this LLC via this token. All of these things are just baby steps. This is not full on, my home and your home ownership tokenized, which I think we'll get to. These are steps. To me, these are steps that are equivalent to years ago when someone bought 2 pizzas with 10,000 Bitcoin. And it was the first time we saw a transaction, someone buying something real for Bitcoin. And we look back and go, man, that person spent billions of dollars on 2 pizzas. But that had to happen in order for someone to see the value in using Bitcoin. And that wasn't a perfect transaction either, right? They had to send to the wallet and there was no guarantee that I was going to get the pizzas, all those kinds of things. It's the same here. This is not a perfect transaction, but it's steps. And it's steps with companies that have been thoughtful about how they're going to go about doing this, all the way from creating an LLC for the home, tokenizing it, putting it on OpenSea, being able to get a loan for it, using the home as collateral. All those parts are there. And so these are just steps and kind of developing a platform for how this is going to work, because my home, your home, all of these are eventually going to be tokenized on some sort of public blockchain.
So Adam, that's the transactional side. What about something like the due diligence on the house? Was that inspection added to the blockchain? Was that tokenized in maintaining the inspection side of things? Is that something you can go and look up as a potential buyer?
You know what? I am not. I can't say that I'm aware of how that happened. I think it would be really interesting, and I've talked about that in the past, about how that should go with the NFT, right? You should be able to see the history of inspections. You should be able to see the history of the appliances and attach all those things to the NFT. I'm not 100% certain if that happened. I hope it did. I just went through an inspection of my home that I'm selling, and it would be and we had to go back years from when we bought the house and compare the 2 inspections and hope we still had the emails and all that. It would be really cool if I could just look on on my NFT, connect it to a wallet, connect my wallet and go, here's the inspection, here's all the different parts, here's who did the inspection. We can go contact them again, all of those things. I hope they did that. And I hope, and if they didn't, that's probably the next step, is taking the inspection report, creating a token out of that, and attaching it to the home. That to me would be the logical next step here.
Well, let's hope we get there sooner rather than later, and not 50 years like John Mack might think. Adam, as always, thank you so much for sharing your thoughts and your time with us today.
Oh, it was great to be here, Mehdi. Thanks again.
And for financial advisors watching, please check out links on the side to digital assets and crypto education. You can better serve your clients with a nice certification in digital assets. Until next time, thank you for watching and good luck investing.